Good morning, degenerates, and welcome to another episode of Boring Crypto IO, a place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is not important. Let's rock and roll. FDIC sells signature bank deposits to Flagstar crypto, not included. SVB's UK arm issues £15 million in bonuses after symbolic bailout. Former Coinbase CTO makes $2 million bet on Bitcoin's performance. And more than 186 US banks well positioned for collapse. SVB analysis reveals. Sweet. The market. Oh, guys. I'm sure if you were paying attention, we've got a bit of a pump from Bitcoin over the weekend. Market cap, $1.178 trillion. We are in the green. Bitcoin dominance continuing to push up towards that 48 that I keep talking about. We are at 46.3%. ETH dominance at 18.5, and a very, very, very conservative 16 Gwei for an ETH transaction. Bitcoin, I think the weekly or the 7-day is what we should be looking at. 27.68% and 4.22 on the 24-hour, the daily. It is smashing the market right now. ETH only sitting at about 13% up for the week. BNB at 14. Any big giant soul at 20.43. DOT 11.5. Link 13.45. OKB at 14. Yeah. Market's looking good. Ooh, Stacks, 75%. Woo! What's going on with Stacks? Jesus. 14% in the last 24 hours. Algo up 10.5. Phantom, 32. Going ham. Immutable X, 60%. Goodness. All right, I'm gonna do this. I don't even know what is Conflux CFX. I have no idea what that is. Maybe I need to look into it. But 138%, 139%. That is crazy. I mean, market sentiment is looking bullish overall. Does that mean we're going to continue to go? I don't know. Let's look at Bitcoin. Bitcoin on the hour. Here's what I was looking at over the weekend, guys. So I saw a bit of a wedge, potential flag, depending on what time frame you were looking at. The flag was right around in here. The flag kind of had like a fake out with these two, but a potential mini double bottom on the hour. So I drew this bottom line as a trend. Believe it or not, like I told you guys, I pulled some money out of the bank because of what's been going on with the banks. And I told you I'm not looking to buy Bitcoin. I mean, we always want Bitcoin to go up. You know, I'm not saying that, but I'm looking at it as a hedge. I would rather have a handful of Bitcoin that could be volatile, but I still have that Bitcoin, as opposed to cash right now. That's just where my head's at, or at least having my cash in the bank. But as an investor with that mindset, just holding plain cash is something that doesn't really ever make me comfortable. So I've been looking for entry points. Like the point I'm getting at, I've been looking for entry points to get into Bitcoin. Whether smart entry points or not, that has yet to be determined. But with this pattern, potential breakouts, everything I was looking at, I front ran this wedge, triangle, whatever you want to call it, roughly about 27.3, 27.310. That's where my green line is. We broke out and came all the way up to 28.413ish, where I have my red line here. So usually on patterns like this too, if you guys don't know, on average, this yellow line would be the measured move. You usually get about 75% of this move before there's a pullback. What is interesting about this is that, yes, we got the move. I'm in profit. but we got a sharp decline. I thought we were gonna get turn this 27.98. We'll just call this 28, because that's probably where most people's heads are based on what exchange you're on. But this $28,000 level, we got a bounce, and I was hoping that that would be our next ticket up, but it bounced a little bit and then it got rejected. Now, where I got excited, because honestly, with this buy, this wasn't really a trade. This was a buy to set and forget, just as I'm building my bag of Bitcoin right now with the cash I have on hand. So I wasn't like freaking out about it. But what I do see that's significantly bullish is we came right back down to the top of this pattern and bounced right back up. So I'm curious to see if this trend line will continue to hold. So we're going to pull this bad boy out. Outside of that, we're going to extend this one too, because if it does want to go down, we'll see if it'll follow this trend line. And if this trend line pull it up. The only negative, I wouldn't say the only negative, but there's a strong negative I'm seeing here. This is obviously a perfect double top, which is not necessarily good. That's a reversal pattern. If I remember correctly, it should be a reversal pattern. I recommend keeping your eye on that. Keeping your eyes on volume. But here's what I think is going on right now. The bears are hoping for 19.5. They're hoping for a pullback to there. The bulls are hoping for a breakout past 30. That is what eyes are looking at in my mind. Let's just mark 30 for shits and gigs. Just as a psychological level, I don't know if there's any like resistance or support on it. I haven't checked. Again, these are just on the hourly too, guys. This is actually very unmacro-ish. So let's put that there. Let's just make it yellow. Let's make it a big yellow. So what I'm hearing people call for, bears are calling for 20, possibly 19.5. Bulls want to break out above 30 and hold above 30. If we break out above 30 and hold above 30, bulls are trashed. They're done. Bears, excuse me. Bears are trashed. That is what I have seen a lot of really, really, really experienced traders right now talking about, that if we get above 30 and hold above 30, flip 30, a little bit above 30 into support, we're off to the races, which I've been saying for quite some time too. The market, the bear market's over. We'll probably move sideways for quite some time, but we are out, potentially as much as we possibly can, out of the woods. And I'm looking at this right now to see if there's anything interesting going on. Yeah, it should be an interesting week too, guys. We with the FOMC meeting, I think it's on Wednesday. Seeing if they're going to continue to raise interest rates based on what's going on with the banks, etc., etc. It should be a very interesting week. Moving on to Ethereum. Ethereum's pumping, but having trouble staying or getting past. It's 1775 is what I have marked based on things I've seen in the past, but we'll call it 18. Now I'm looking at Ethereum on a daily, and it's just something I because there's been so much movement, we've been focusing on the smaller time frames, which isn't necessarily the smartest thing to do. So I backed out on Ethereum, and we're on the daily. And if you look, since this giant run up, the reality is we're just moving sideways. And we just finally kind of got out of this trend of moving sideways. But could what we're seeing up here, could this be potentially what we saw down here? Because the general trend was this line right here at 1485. We'll call it 15. And then we had a breakdown, but then it instantly got bought back up, which turns it into, a bear trap. Could this potentially just be another bull trap, and then we continue to range sideways? I don't know. Just ideas, right? Everything is an idea, and you're trying to build a case for that idea. Let me go ahead and get rid of this stuff, guys, before we move on. So just things to think about. Like I said, I did get into Bitcoin. I scaled in, and I will continue to scale in based on what I see. Anytime I see an entry that looks relatively smart, I will go ahead and slowly scale in. That is what I'm doing. I'm just making you guys aware. Again, this is not financial advice. I'm not a financial advisor. I'm not even smart. I know nothing. I am just some weird random dude in his room on YouTube talking to himself. But you know what I say? Trade conservatively. Use your stop losses. Be smart. Don't get greedy. Moving on to news, guys. All right. FDIC sells signature bank deposits to Flagstar, but crypto not included. The 40 branches of Signature Bank will officially reopen and operate as Flagstar Bank on March 20th. Today. Only a week after its collapse, Signature Bank's deposits and loans are set to be sold to Flagstar Bank, a subsidiary of New York Community Bank Corp. But crypto-related deposits will not be a part of the deal. Okay. The United States Federal Deposit Insurance Corporation announced the agreement on March 19th, which will see a $38.4 billion worth of non-cryptocurrency related deposits and $12.9 billion in loans taken over by the Michigan bank based bank under a purchase and assumption agreement. I have no idea what that means. From March 20th, Signatures Bank 40 branches will begin operating as Flagstar Bank, where all deposits assumed by Flagstar will continue to be insured up until FDIC. It's $250,000 insurance limit. The takeover deal for Flagstar Bank did not include approximately $4 billion of deposits held by Signature Bank's digital asset business. Instead, the FDIC confirmed that it would transfer these deposits directly to customers who opened a digital bank account, stating, "The FDIC will provide these deposits directly to customers whose accounts are associated with the digital banking business." The $4 billion figure amounts to 4.5% of the total $88.6 billion deposits the Signature Bank had as of December 31st. Coinbase, Celsius, and Paxos are three crypto firms that recently confirmed having some exposure to Signature Bank. Last week, a March 17th report from Reuters cited two sources who suggested that any buyer of Signature would be required to divest crypto activities as part of a potential rescue plan. I would love to see what their reasoning behind any of this was. Like, we all know it's a hit on crypto, but it's interesting that they could come out and say that you can't hold any crypto or do any crypto business, I should say, but not give an explanation of why. Like, it's a very interesting thing. At the time, an FDIC spokesman denied this, noting that the agency did not require crypto divestment as part of any sale. Yet here we are. Fucking liars. Castle Island venture partner Nick Carter believes the latest announcement shows that the FDIC lied in its response to Reuters. I'm not going to read this, but I recommend you do. The takeover comes after Signature Bank Bridge Bank was created by the FDIC on March 12th, following the New York Department of Financial Services closing the bank and appointing the FDIC as its receiver. Yeah, Nick, I think it looks like a _ Carter. Yeah, I would say read that. This is my point, man. These guys are full of absolute trash. They're just lying to us. And I hate to sound like a defeated, sad, moping puppy dog over here, but like, all these people that are that are in place to quote unquote protect the investor, or quote unquote protect the retail investor. How? Show me how. What kind of weird wheeling and dealing are you doing when you allow the sale of a bank to help the depositors, but then don't allow the crypto business to continue? Just explain it to me. Give me your, give us a reason. Sell us on it. Like we'd love to hear why. Anyway, let me know what you guys think. Comments down below. SVB's UK arm issues £15 million in bonuses after symbolic bailout. Interesting. Insider sources reportedly described the bonus pool as modest adding that the stock held by senior execs had been rendered worthless following Silicon Valley Bank UK arms near collapse. Silicon Valley Bank UK, SVB UK, has granted millions of pounds in employee bonuses just days after it was rescued by global banking giant HSBC for just £1 according to unnamed sources. In a March 18th Sky News report citing unnamed sources, it was reported that payouts to SVB UK staff and senior execs, surprise, surprise, were signed off earlier this week by HSBC UK Bank, the institution which acquired SVB UK for £1, 1.22 USD on March 13th. It was reportedly unclear how much had been awarded to SVB UK CEO Erin Platts or her senior colleagues. However, the sources described the bonus pool as modest and said that it totaled between 15 million and 20 million pounds, approximately 18.26 million, and 24.35 million. That's modest. Interesting. I wish I had a modest $24 million in the bank. While the insiders reportedly noted that if SVB, God, these acronyms are killing me today. If SVB UK had not been acquired solvently, the bonuses wouldn't have been paid this week. One insider reportedly pointed out that the stock held by senior execs and other employees had been rendered worthless by SVB UK's near collapse. Another insider reportedly added that the bonus payments were a signal of HSBC's confidence in the talent base at SVB UK and were to honor previous agreed payments in an effort to retain key staff. SVB UK previously stated in a March 17th tweet that it was delighted to now be part of HSBC after 14 years of supporting and growing the UK's innovative economy. This comes after the Bank of England, BOE, shut down the operations of SVB UK on March 10th, stating that it had a limited presence and no critical functions supporting the financial system. The statement declared that SVB UK would stop making payments or accepting deposits, as the BOE intended to apply to the court to place SVB into a bank insolvency procedure. Meanwhile, SVB's United States banking arm has been taken into government ownership. Its holding company, SVB Financial Group, filed a Chapter 11 bankruptcy protection on March 17th as it seeks buyers for its other assets. SVB Group's Chief Restructuring Officer, William Kostouros, I have no idea if I said that correctly, I never do, stated that Chapter 11 process will allow SVB Financial Group to preserve value as it evaluates strategic alternatives for its prized business and assets. Mr. K emphasized that SVB Capital and SVB Securities will continue to operate, led by their respective independent arms. Interesting. People get money. All right, y'all. Take this one with a grain of salt. It's fun to talk about. It's fun to fantasize. I'm going to come straight out and say, do I think this will happen? Probably not. But in the land of Bitcoin, I'm sure we're all aware that anything is possible. So let's fill those hopium bags. Former Coinbase CTO makes a $2 million bet on Bitcoin's performance. And I have no idea how to pronounce this gentleman's name, and I'm going to slaughter it. But Mr. B has predicted that Bitcoin will reach $1 million within 90 days, which is sometime in June, due to hyperinflation in the United States, which, if this happens because of what he's saying, this is freaking terrifying because I live in the United States. I hope he's wrong to some extent, because I don't want to deal with living in a country that goes into hyperinflation. That is not like woohoo for Bitcoin. I mean, Bitcoin pumping is awesome, but the United States collapsing because of hyperinflation, it won't be pretty for people, period. It would be a very tragic situation. Anyways, moving on to the story. Former Coinbase Chief Technology Officer Mr. B has made a millionaire bet on Bitcoin's price over the next 90 days, predicting the cryptocurrency will reach 1 million by June 17th. The wager was initiated on March 17th when pseudonymous Twitter user James Medlock offered to bet anyone $1 million the United States would not experience hyperinflation. A few hours later, the former Coinbase exec accepted the bet. Sir, I believe we have ourselves a deal. Under the proposed terms, if the Bitcoin's price fails to reach $1 million by June 17th, Medlock will win $1 million worth of the dollar-pegged stablecoin USDC and 1 Bitcoin. In the same way, if Bitcoin is worth at least 1 million by the date, then Mr. B can keep the 1 Bitcoin and the $1 million in USDC. Mr. B, because that's his last name, I guess, explained in the thread, you buy 1 Bitcoin, I will send $1 million. This is a 40-to-1 odds as 1 Bitcoin is worth 26,000. The term is 90 days. Ballsy. Very ballsy. Per the thread on Twitter, users helped set up a smart contract. They actually really did this. I read the tweet. I didn't know if they actually went through with the bet. Set up a smart contract with the betting terms. Mr. B also disclosed that he would move another $1 million in USDC for another wager on the same topic. I'm moving $2 million into USDC for the bet. I will do it with Medlock and one other person, sufficient to prove the point. See my next tweet. Everyone else should just go buy Bitcoin, as it'll be much cheaper for you than locking one up for 90 days. Medlock and Mr. B, we'll call Mr. S now because now they're using his last name, made the wager based on their different views of the U.S. economy future amid ongoing uncertainty regarding its banking system. Mr. B, or Mr. S, because they keep picking which names they want to use, argues that there's an impending crisis that will lead to the deflation of the U.S. dollar and thus to a hyperinflation scenario that would take the BTC price to $1 million. Medlock, on the other hand, is bearish about the upcoming hyperinflation in the country. Meanwhile, Bitcoin's price has reached $27,387 at the time of writing this, which is actually like right before I got in, or right after I got in, with its market cap adding over 194 billion year to date to a 66% growth in 2023, outperforming Wall Street bank stocks amid fears of a global banking crisis. Also, for the first time in the year, Bitcoin's price has shifted away from United States stocks, rising about 65% compared to the S&P 5, 2.5% gains, and a Nasdaq's 15% decline, Cointelegraph reported. So guys, this is an interesting one. I mean, yeah, we all want to see Bitcoin pump, but at the price of what? Millions and millions of people going basically to rock bottom in their life, losing everything. Not the game plan I want to play out. But anyway, let me know what you guys think. Comments down below. It's probably all bullshit, just being honest. It'd be really hard to see that happen. Last but not least, more than 186 U.S. banks well positioned for collapse, SVB analysis reveals. Now, I chose to use this after reading the Bitcoin thing because this would be what would lead, in my opinion, to Bitcoin getting to $1 million. All right, rising interest rates, which brought down the U.S. banking system assets market value by $2 trillion, combined with a large share of uninsured deposits at some U.S. banks, threatens bank stability. You think? The perfect mix of losses, uninsured leverage, and an extensive loan portfolio, among other factors, resulted in the fall of SVB. Comparing SVB's situation with other players revealed that nearly 190 banks operating in the United States are potentially at risk of a run. Any bank in the United States is potentially at risk of a run. Don't lie to yourself. While SVB's collapse came as a reminder of the fragility of the traditional financial system, a recent analysis by economists showed that a large number of banks are at risk from uninsured deposit withdrawals. It read, even if only half of uninsured depositors decided to withdraw, almost 190 banks are at a potential risk of impairment to insured depositors, which potentially $300 billion of insured deposits are at risk. Monetary policies penned down by central banks can hurt long-term assets such as government bonds and mortgages, creating losses for banks. The report explains that a bank is considered insolvent if the market-to-market value of its assets once uninsured deposits are paid is insufficient to repay all insured deposits. The data in the above graph represents, which I'll go ahead and make that easier to see. The data in the above graph represents the assets based on bank call reports as of Q1 of 2022. Banks in the top right corner alongside SVB with assets of $218 billion had the most severe asset losses and the largest percentage of uninsured deposits to market-to-market assets. The recent rise in interest rates, which brought down the U.S. banking system assets market value by $2 trillion, combined with a large share of uninsured deposits at some U.S. banks, threatened bank stability. Yeah. Recent declines in bank assets value significantly increased the fragility of the U.S. banking system to uninsured depositor runs. The study concluded, as federal government steps in to protect depositors of SVB and Signature Bank, President Joe Biden assured no impact on taxpaying citizens. This is how they're printing more money, and this is how the devaluation of the dollar will continue, leading to a potential hyperinflation, in case you didn't put that all together. And there's that guy talking about that thing. However, one user pointed out to Biden on Twitter that everything you do or touch costs taxpayers. All right, y'all. I don't wish by any step or measure that we go into hyperinflation. Again, yes, do I want to see Bitcoin pump? Absolutely. I'm in the crypto space, and I want to see crypto continue going up and to the right. But at the cost of what? That's the concern, right? Let's look at Bitcoin one last time before we get out of here. We are still trying to hold in this range above 28 to 28.4-ish. Hopefully this is not a double top. But keep your eyes on it, guys. Stop losses, etc., etc. That's all I got for you today. I hope you guys are all having a wonderful morning. I appreciate you taking the time to sit through my rambling and my nonsense. Per usual, if you do enjoy the content I provide here on Boring Crypto IO, please subscribe to the channel, turn on the bell for notifications, watch, like, and share these videos, and I'll see y'all bright and early. One of these days, I gotta figure out why I can't talk. I'll see y'all bright and early in the morning. I'm out of here.